Hi, and welcome to the Stock Scores Market Minutes for August 7th, 2017. This week's topic, do you know who's winning? An important concept for traders and investors. Plus, I'll do my regular weekly market analysis and then the trade of the week on TEVA Pharmaceutical. Do you know who's winning? Traders tend to focus on the indexes when determining who is in control of the market. Now, it's an important question to answer because if the buyers are in control, then you want to be generally a buyer. If the market is being controlled by the sellers, then you want to be a short seller. But if you only look at the major market indexes, you can get a misleading view of what is going on because the major market indexes are heavily weighted by the largest companies that make up that index. It is better to get a sense of what most of the stocks in the universe of stocks that you like to trade are actually doing. I like to track the areas that are strong and weak, the sectors that are leading, the sectors that are lagging, and consider the overall picture from what trades are working. You want to trade with the group that is in control, but that can be very different within one area of the market over another. You may be short selling gold stocks, but buying biotech stocks because that's who's winning in those sectors. All right, let's get into this week's market analysis. So the S&P 500, this is the short-term chart. You can see there it trended up and now it is consolidating after the gains, which is pretty typical. It's building a little ascending triangle. What we want to watch for is a break to the upside. If instead we get a breakdown through these floors, which would end these rising bottoms, then you want to be a little more cautious. Moving along to the longer term chart, this is the weekly chart. You can see we've got a nice long-term upward trend, plus a medium-term upward trend. And as long as those trends are in place, the buyers are in control of the overall market, and therefore you want to be a buyer of the general market. But we're going to talk about what's been going on within some areas of the market in a moment. On the Russell 2000, you can see that the sellers have been in control the last couple of weeks, but in the big picture, we are building rising bottoms. This could be threatened over here. The market is trying to hold this breakout that happened here, but if we break down through this floor, then you got to be pretty cautious again with the small cap stocks, which is what the Russell 2000 represents. Generally speaking, this area of the market is pretty dead, and so I don't recommend trading it until it can start to gather some upward momentum. On the Canadian market, we have a little bit of optimism building in the last week or so. As you'll probably know, I've been somewhat negative on this market because it's been just so quiet and actually drifting lower, but it does seem to be catching a bid, probably because oil and gold have been moving higher, which of course the TSX is heavily weighted on. And so what we're seeing then is a possible break of the sort of gradual downward slide that the market's been in for the last few months. We still need to break up and out of that channel, but it is showing some promise. I just think there is still more work to be done, so you want to remain somewhat cautious with Canadian stocks. Speaking of being cautious, here is the TSX Venture. You can see the tops are falling from left to right. That means the sellers are in control of this small or micro cap group of stocks, and therefore you want to be very cautious. Now, of course, when you're talking about microcap, there's a lot of alpha in microcap, which means there are individual stocks that can trade very strongly even if the market's going lower because they have something exciting going on in their business. And so if you're going to trade that way, it's okay to trade TSX Venture stocks. You just have to really focus on abnormal activity with those stocks. Moving along, here is the 20-year Treasury Bond ETF, TLT. And you can see we've had a little bit of a drift lower. This looks like a bit of a flag in this pattern, but you could also argue that it's just having trouble breaking that downward trend line. We kind of tickled through it, but it doesn't seem to be holding that breakout. So I would say that this is a neutral chart. If it breaks to the upside from this flag, then we're bullish. If it breaks down through here, then you're going to go back to bearish because we're probably going to test those lows. US dollar has been falling for the last number of months, and it's actually gone parabolic to the downside. But notice this candle here for the week. It closed where it opened after hitting a new low, and basically it's bouncing off of support from the lows of 2016. So I expect that it will hold those lows, at least in the short term, and we probably get a little bit of a rally higher in the US dollar. So if you're looking to convert some money from, say, Canadian to US, probably a good time. I would say there's a 70% chance that the US dollar gets stronger over the next few weeks. Now, looking out in months, there's still no evidence of that until the downward trend line is broken. And of course, gold will benefit from a weakening US dollar. And you can see that it did get a little bit of a benefit there over a 4 or 5 week period. But big picture, gold is stuck in this pennant pattern that I've been highlighting the last little while. Each move in this pattern shows decreasing volatility, which means we'll probably come up into here and then down. Whoops. Sorry, every time I touch my pen to the right of my screen, it jumps the screen forward. So I think we'll probably move down from here as we've hit the top of that pennant pattern. But ultimately what you want to watch for is, do we break to the upside out of that pennant or the downside? And that will telegraph the next leg of the move. On to oil. Oil has had a good little comeback rally. It's actually broken this downward trend line, but I wouldn't say decisively so yet. But still, over the past month to 6 weeks, it has shown some rising bottoms. The key now is, can it break from this stall? It's stalling right here. Will it break to the upside and move higher still, breaking out of this downward sloping channel that we've been in for a number of months? Or what is most probably going to happen, do we roll over and move back into the channel? Now, the key thing here, I think, is what the US dollar does, because if the US dollar does rally back, that'll bring some weakness to oil, as typically oil goes down when the US dollar goes up. And on the fear side, it's been relatively quiet on the VIX, but it is, I would say, a little bit escalated from what we had back here after this spike. So there's a little bit of fear, a little bit of anticipation perhaps of the fall coming up, which is when the sellers tend to act. But so far, it's nothing critical. I do think this is an important chart to watch, just because I'm seeing a pickup in the volatility of the volatility ETF VXX. So my ratings then, bullish on both time frames for US stocks. Long-term bearish on Canada, although we're just about switching that to neutral short-term, and then neutral on gold and oil as they trying to stabilize, but they still have some work to do before they can be declared bullish. So while the US indexes did not show a lot of weakness, the sellers do seem to show more strength this week, and this is something I'm going to talk about when we look at the trade of the week. In my day trading this past week, what I found was that most of the winning trades, or the winning approach to the market, was to be a short seller. So buyers were acting in the morning, and then the sellers would carry the strength through the rest of the day. And this is where the indexes are deceptive, because I've told you that the indexes look pretty bullish, but inside the market, what I'm seeing happening is a little bit of a pickup in the selling pressure anytime there's some strength or even weakness. You know, stocks like TEVA that were weak, they got a lot weaker through the day, and we'll talk about that in just a moment. Now, this fact could lead to more weakness in the near term. I think it's something we want to watch on. But having said that, the indexes are still strong, so let's see how it works out. Canadian stocks have shown some life recently, but they have work to do. A bounce in the US dollar may bring some profit taking in gold and oil, which have done well over the last few weeks. And as I said, there is a slight increase in fear. All right, let's look at the trade of the week. This was a day trade, and it's an example of a trade that worked really well on the short side. And as I said earlier, most of the winning trades that my rules found were short trades. The winning trades from last week, the majority were short. So despite the fact that the markets actually look pretty good overall. So here's an example. The entry point on this one was 1102. This abnormal volume indicator is my own indicator. It just helps me to find the stocks worth trading. And this 5.2 is a very high rating. Anything over 3 is great. 5.2 is about as high as you will see. And the entry signal right there led to a, I think, 8-to-1 risk reward down to there. So nice risk reward trade-off. You risk 1,000, you make 8,000. You risk 100, you make 800. Those are the kind of trades we love to see. All right, well, that has been the Stock Scorers Market Minutes. Hope you've enjoyed the video this week. Please like it if you have. Please comment if you have any questions, and subscribe to the channel. It always helps to build the numbers. Have a great week in the market, and trade well.